Hello and welcome back. I'm Chris Allen with the Dignity Group of Companies. Today I'm with Tom DiSabatino. We're going to be discussing life insurance, and joining us also is Denny Vlahos, our advanced planner. Um, our last segment, Tom and I were discussing about his career path and what he likes best about the insurance business. And today, what we want to do is talk a little bit about the actual insurance, like different types. And of course, you're in the business, I'm in the business. For the people at home, Tom, why don't you tell us a little bit about the types of insurance?
Well, Chris, to keep it simple, there's many types of life insurance. So when I'm sitting in front of a client, let's say a prospective new client, I try to tell them there's two ways you can purchase life insurance. You can own it or you can rent it. I know that might sound a little odd, but owning a life insurance policy would be purchasing an insurance contract that would be called permanent, which whenever you buy the contract at whatever age, you're locked into that premium, and the insurance company can never raise the rate on you or cancel the policy. The other type of coverage is what we call term insurance. Term insurance is a very valuable type of life insurance, and it's really misunderstood. It's really good for young people that have a family and maybe a couple kids, or a business owner that might have a huge loan. In the event of his death, the bank can get paid back. So there's a lot of uses for term insurance. The advantage is you can get a lot of life insurance for not a lot of money. The premium is generally low. The disadvantage, and I just happen to have this is a true statement from a letter that arrived on my desk a few weeks ago. It's from an insurance company that a gentleman bought a term life insurance policy 20 years ago. And at that point, he was 55. And his premium, he paid level premium for 20 years, $71.32 a month. Unfortunately, the new premium, beginning on March 20th, 2020, we will debit your account for $1,404.80 per month. That doesn't seem even fair, but the insurance company locked this gentleman in for 20 years, and sadly, the insurance agent who sold him that policy did not keep in touch with this gentleman, and his family is now forced to pay $1,400 a month, and the premium will increase every year.
That's a huge jump. Denny and I were talking about some of the different cases that we've run into, and I absolutely love the fact that you're sharing this with people. We know there's options out there. We were just talking about some of the different permanent policies that you're talking about. I like I'd rather own the home than rent type of thing. Mm-hmm. It's forever. But one of the other ones we were talking about is another case where the gentleman passed away and his coverage had ran out at age 80, and he passed away at 81. There was nothing after all those years of paying that premium.
Correct.
So I know one of the things that we've talked about, between the three of us is how we do our reviews. Obviously, we have the tax practice that comes into place, and then we always tell people, you need to talk with Tom about life insurance, not only for just the basic to have it, but also to review for beneficiary changes.
Certainly,
those things have changed. What also do you review when you're looking at that?
Well, everybody has a different situation, but generally one thing is for sure is change. Nothing stays the same. A client's health might change. So if he's locked into a term insurance policy for, let's say, 15 years, and he's in the 9th year of that 15-year term, and he goes to the doctor, and the doctor finds out, unfortunately, that he has cancer, he can convert that term insurance policy to a permanent one with no health questions, no exam, no physical. That's the beauty of having a life insurance policy that's convertible to permanent.
So in that case, you'd almost be like a rent to own.
Correct.
You know, in the analogy you gave with the home. On is there? I know in certain companies there's a time period, right, that we're allowed to convert to.
Yeah, generally, Chris, the time frame is that the client can convert up until age 70. After age 70, it's not convertible. So actually, always the best time to convert to permanent is when you're younger, because the cost per thousand is less. So the older that we get, the cost, the mortality rate goes up every year.
Right.
So actually, I do a lot of planning for grandparents, and they can purchase a payment on a grandchild. And sometimes you can do a one-time payment for $2,500 that can pay up a $25,000 life insurance policy, and there's no more premiums. It's a pretty cool thing.
That is a pretty cool thing. On from the standpoint of what you just said. So a grandparent who has maybe a required minimum distribution that they've taken this year because they were 70 and a half, they could use that money then for the grandchild, is what you're saying.
It's a great idea, because most of our clients, as you know, they really don't want to take their required minimum distribution from their IRA, but they have to.
They have to, yeah.
That's the internal revenue. That's not the insurance company. So it's a great way for them to pass on a legacy, sort of, and transfer that money out of that IRA into a gift for a child or a grandchild.
Okay. So if anybody out there would like to have a review with Tom, or have an interest in finding out more about the term or permanent options, or a combination of both, give Tom a call. We're going to have him call you at the insurance office, which is?
The number is 234-203-3133.
Or visit us at the website of
www.dignityInsuranceGroup.com.
Thanks for joining us. Have a great day.